An iron condor strategy with no risk. So let's go ahead and talk about this here today. This risk-free iron condor that again I saw here today earlier in the Discord. So what I'm going to do here is I'm on ticker symbol TTCF. So this is Tattooed Chef. And let's take a look at this. Let's go into the options here. Now we're specifically talking about a short iron condor here. So a short iron condor is a neutral strategy, right? So you're going to benefit when a stock trades kind of in a defined range, and it's implemented for a credit, and so that means you put up some collateral when you enter this strategy. Now the way you set up a short iron condor is the following here. So let me show you. So what you would do is you would determine what price you believe the stock will be between. Now, the example that I saw on Discord was actually using the range of $8.50 to $9, which really doesn't make a whole lot of sense, but that's okay. We can still talk about this here. So let's say you think that TTCF will trade between $8.50 and $9 from now until expiration here. So what you would do then is you would start by selling a put at the lower end of that range. So if you think it's going to be between $8.50 and $9, you would sell a put at the bottom of that range, so at $8.50, and then you would sell a call at the top of that range. So that would be $9 here. Now, the next thing we need to do here to complete our short iron condor is we need to buy a call with a higher strike than the strike of the call that we're selling. So we're selling a call at the $9 strike. So we'd want to buy a call with a higher strike. So I'm just going to go to the one right above it. So let's say we wanted to buy this call here. And then finally, we need to switch back to puts. And now we need to buy a put with a lower strike than the strike of the put that we're selling at $8.50 here. So, and this is very, you need to be very careful here because this has to be a very specific strike. So the distance between the calls here should have the distance here, which is 0.5. That should also be the distance between the puts. So since we're selling the put at the $8.50 and the puts have to have a distance of 0.5 to match the calls, I need to buy the put at the $8 strike. So lower strike than the strike of the put that I sold, and the puts now have the same distance from each other as the calls. That's very important here. And so you can see, right, Robinhood recognizes this as a short iron condor. So that's how you set up a short iron condor. Now, what we really want to focus on here in today's video is this down here, though, okay? And this is what the individual saw when they went ahead and tried this out. So what is Robinhood showing us here? So Robinhood is showing us that for this particular short iron condor, max profit is $50, max loss is $0. So it's telling us that there's actually, that this is a risk-free iron condor, right? Because my max loss here, it says $0. If you look at the chart here, it's either $0 or I'm making some money here potentially. Okay, so let's go over to option strat. Let's see what option strat says. So if we go over to option strat here, and again, I'll put a link to this in the description below. Really great tool to help us visualize a trade. So let's just go to Iron Condor here. They have a link for it. So if you go to Iron Condor, and again, we are looking at TTCF here today. We go to October 21st. So again, let's set up our Iron Condor, right? So again, you determine what range you think the stock will be trading between. This individual had between $8.50 and $9. So again, you want to sell a call at the top of that range. So sell a call at the $9 strike, sell a put at the bottom of that range. So that would be $8.50. And then again, you want to buy a call with a higher strike than the strike of the call you're selling. So I just went up to the one right above it, $9.50. And now we need to buy a put with a lower strike than the strike of the put that we're selling. And the puts have to have the same distance from each other as the calls. So the calls have a 0.5 distance away from each other. So I have to buy the put at the $8 strike so that these are 0.5 away from each other. And as you can see here on option strat, we actually get the same thing, right? We're entering for a credit. That's how a short iron condor works. You get $50. You'll have to put up $50 in collateral. And then look at this, my min profit 0, max profit 50, right? Usually you'll see a max loss here. There's no max loss, there's just a min profit of 0. meaning that, again, it's kind of telling us that it's risk-free, right? Chance of profit 100%. Although, if you make $0, it's not really a profit, but nonetheless, right? It's telling us it's risk-free. So is this really a risk-free iron condor here? Well, let's go back to Robinhood and let's try to place this here. So let's continue here and let's go ahead and try to place this. So let me submit this, right? So let's see what happens. Again, I'm getting $50 in credit. I have to put up $50 in collateral. So let's see what happens. I'm going to submit this now. And notice what happens here. We get an error, right? Right here, error. Order premium must be less than collateral. So in other words, right, we did not find an infinite money glitch. And Robinhood is smart enough here to know that this is impossible, right? So basically what it's telling me here is that the premium that you're getting, which is this min credit, has to be less than the collateral. Because if it's the same, that's going to be a risk-free strategy. If it's more, which it lets you actually, potentially, it kind of, makes it look like it could even be more here. Let me set this back up here. If we set this thing back up here again, notice here that if I go and I continue here, look at the bid ask. The bid ask is between 25 and 75. So sometimes you might even see this be like, 0.60, for example. And here it's actually showing you that you're guaranteed $10 no matter what, right? You're guaranteed 10 up to potentially $60 here, right? Because and if you look at the bid ask, right, you may think that's even possible. You might think, okay, well, we have 25 down here, we have 75, so 60 might be possible, right? But again, right, Robinhood is smart enough to know, this is not possible. The premium you're getting must be less than the collateral. If it's the same, it's a risk-free strategy. If it's more, you're guaranteeing yourself, whatever the credit is minus the collateral. So here we'd be guaranteed $10, which, it's just not possible. So again, when you see something like that, right, what's going on? Again, the bid ask is very wide. The bid ask spread is very wide because volume is very low on these options. And so you need to be very careful with that. And again, even if you thought you could do it, like you saw, right, when I submitted it, Robinhood's not going to let you actually enter that trade. So when you run into a scenario like this, where, it tells you that there is no loss, that it's risk-free, or it shows that there's going to be a guaranteed profit, check the bid-ask spread. You'll probably see that it's going to be extremely wide. And when it comes to these types of options, right, or these strategies where you have a very wide bid-ask, you may not want to even get into these strategies in the first place because, number one, it's going to be very hard to get filled. Number two, if you do get filled, it's going to be very hard to close out of them in the future, right? So just wanted to point that out there. Again, I still see this question a lot. And of course, it doesn't have to be an iron condor. It could be any strategy where you see that, Robinhood's telling you it's risk-free, Option Strat is showing you that it's risk-free or that there's a guaranteed profit. Just understand that that's just not going to work, right? There is no such thing as free money in the stock market. So anyways, if you guys have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.